Hey there guys, Mike Munzing, Munzing Mortgage Group down here in South Orange County. Bringing these videos to you to let you know what's going on in the mortgage industry. It's an exciting time. We've got the summer coming. It's going to be great. We made it through Easter. Hopefully you had a great day with family and friends, and it's just a wonderful time. We're on to a hot weekend. This should be a big one. So be sure and go over to my website at www.mikemunzing.com. Pull up the rate sheet, take that with you to your open house. Go look at some of the other reports there. The more information that you can have at your open house, the better. It'll let those buyers know that you're the expert in the area, and your seller will be pleased as well. Okay, this week I want to take a quick look at the propertyradar.com report that Sean O'Toole and the crew up in Northern California put out. What he says is, in the big header up here, you can see it here, is that California home sales overall have jumped 21% in the month of March. It's a huge jump, big jump there, while the median home gains are 4.6% higher and the median home prices to its highest level in 6 years. That is very exciting for our home sellers. That may tend to bring more homes into the market and let us get some more homes for our buyers to buy. The breakdown is that the distressed sales dropped down about 7.4%, but the non-distressed, the equity sellers, jumped up by 25.2%. That's amazing. The folks over at Property Radar were actually surprised by the jump in the median sales prices. Now, let's not forget that that could mean that the higher priced homes are the ones that are selling, but on a large average of all of California, that trend does tend to mean something in the broader market. Let's look at a couple of charts here. First is the home sales chart. You can see this. An important thing you want to look at here, once again, is that year over year, the actual numbers have dropped from March of 2013 to March of 2014. Sales have dropped about 13.3%. That's in that little box over here by me. But the month over month, you can see that big spike up here at the end. Once again, that is up 25.2% on the non-distressed. Now the next chart is that, once again, the 13.3%, a little broken out a little more clearly here. This is a year over year chart for home sales. You can see that big drop off for this year, more indicative. Another chart actually that I want to bring up is the equity chart. Once again, we are 13.5% of the homes and the homeowners out in California are still underwater. That's about 1.2 million homeowners. As prices head upward, obviously that number shrinks. So that's important to realize that. And finally, as I used to put these entire videos together for the foreclosures when they were really hot, I'll just bring up this snapshot chart real quick to show that both month over month, they've dropped on all parts. You've got, let's see, you've got notice of defaults, notice of trustee sales, and then actual foreclosure sales. Month over month, they've dropped. And then year over year, they've dropped drastically. So the big push, well, the raise in the market, first of all, the hot market has decreased those, and then the banks have really backed off those as well. So go ahead and get that report there at propertyradar.com. It's a fantastic report. You can pick that one up for free, and it's very informative on what's going on in the overall California market. This week, I'm going to bring in another little video clip from my friends Brian and Frank, because they are getting all over the CFPB. CFPB are doing some naughty things, you might say. And this is an interesting clip where they covered today the incomes that they're making. Enjoy this clip. We'll talk after.
Why in the hell does your average bank regulator make more than your average banker? Why in the hell does any regulator make more money than the person that they're regulating? Shouldn't it be the other way around? Example, the average highway patrol officer who regulates your highway driving makes about $47,075 average per year. Well, the average driver makes $55,030 a year. Seems
Like the Regulators making less. Buster Posey, the catcher for the San Francisco Giants, makes $18.5 million a year, and the umpire that regulates his game makes between $120,000 and $350,000 per year. So here's how it goes.
And before you start complaining about how much money Buster Posey makes and say that teachers should be making more money, listen, if a teacher could hit a hanging curveball 400 feet, they would be making more money. Now on to banking. The average bank employee makes $49,500 a year. Just above the average employee in general who makes $45,790 per year. The average employee of the OCC, the FDIC, and the CFPB makes, guess. They make $190,000 per year on average. It's not even close. At the OCC, the average secretary makes $79,182. It's a freaking secretary, and they got gubby benefits.
Well, they're in Washington where the cost of living is higher than most other places.
Yeah, that's because they're all federal employees. They're all making a crap load of money.
And get this, the average salary for a bank employee is skewed by its top earners. Meaning Jamie Dimon, who's one person at Chase, he made $23 million in 2011 alone.
Along with all the other super high executives, which make a whole bunch of money, meaning the average Chase employee actually has a lower income than we're talking about. And when you consider all the other super high income executives at Chase, if you were to take them out of the equation, the actual employees at Chase make less than what we're even talking about. Meaning the bank regulators divide in their income over who they regulate is even more pronounced than what we're talking about. Unreal.
Worth noting is we didn't get the Federal Reserve's average income because, like the Fed always does, they don't say. Mum's the word.
My question to you specifically is, do you know who received that $1 trillion plus that the Fed extended and put on its balance sheet since last September? Do you know the identity of the recipients?
I do not know. We have not looked at that specific area.
And the CFPB, well, maybe they deserve the money. Because, they're working really hard right now at putting together the most comprehensive and complete database of your personal information ever.
The new comprehensive file information from the CFPB is going to date back to 1998, and the information is going to contain, well, pretty much everything. Mortgage records, real estate transactions, housing demographic data, physical characteristics of the house. Why would they need that? And also of the neighborhood. Even why would they need that? Credit lines, addresses, phone numbers, race, ethnicities, credit information, credit types, credit cards, outstanding balances, personal identifiers. That would be your driver's license, your social security number, and your passports, and pretty much anything else they can think of.
Why would the Consumer Financial Protection Bureau need all my personal information to protect me?
Big Brother's looking out for you, Frank.
Okay, of course, so the data can be used, organized, to analyze anything on or about me. Pretty much awesome when you consider they're already tracking phones, following our social sites, and our search habits. But of course, it's all for our own good.
And you wonder why I'm a small government guy? This is what happens when you've got regulatory agencies running amok and doing crazy things. 190 plus thousand a year average. I sit on a board where the staff is making 113,000 a year. And these are just government bureaucracies that are regulating us. I sit on the board. I don't get paid, but the staffers are making a ton of money. It's the staffers behind the scenes, sitting behind closed doors. They're the ones making massive amounts of money on the government. And those of us in the private sector, you selling homes, me doing loans, we are having a rough time out here. So when I say small government is good, this is a big reason why, and you should really, really consider that and look into that. Once again, as a 25-year broker, lender down here in Orange County, I've got the great programs, I've got the great experience to get your buyers in there. And these deals, whether you've heard that or not and you're with your buyers, they're getting very complicated. You've got jobs changing, incomes changing, people going from full to part-time, from salary to commission. It really takes an experienced lender, loan officer to put this all together. I want to be here for you. Call me anytime, 949-689-5626. So give me a call. Let's work together. I'm here for you. I'm here for your buyers. God bless you on this beautiful weekend. God bless your family and this beautiful country. Call me. Bye-bye.